President Trump today signing an executive order starting the process of rolling back key parts of the Dodd-Frank financial regulation law, which has harmed banks and made their ability or inability to lend to Main Street.
But we expect to be cutting a lot out of Dodd-Frank because, frankly, I have so many people, friends of mine, that have nice businesses. They can't borrow money. They just can't get any money because the banks just won't let them borrow because of the rules and regulations.
President Trump also ordered a delay in the fiduciary rules, which puts requirements on how financial advisors manage retirement accounts. The Securities Industry and Financial Markets Association is among those suing to overturn this rule. Ken Bentsen is with SIFMA. He's the CEO, and he joins us now. Ken, thanks for joining us.
Thank you for having me.
Of course, there's a lot of initial outrage. They're saying that if you go back far enough, President Barack Obama was elected in part because Wall Street neglected its own responsibilities and proved to the world they couldn't police themselves, let alone look out for their clients, and now all that's being reversed.
Well, I think really you have to go back and look at where we've come over the last 8 years. I mean, the financial sector in the U.S., on the one hand, is the envy of the world, particularly our capital markets, and at the same time, it's one of the most highly regulated sectors of the U.S. economy. And many of the rules are important. You have to have rules of the road. You need to have market rules, transparency rules, and the like. But over the last 8 years, we've seen a tremendous amount of new rules put in place. The level of capital is increased twofold. The quality of capital has increased dramatically. All sorts of new rules in terms of how banks and other financial institutions manage their balance sheets. And we really are at a period of time where we need to step back and take a look and see where the balance between financial stability and fueling economic growth are. Other jurisdictions have done this in Europe and in Asia, and we think it's appropriate here in the U.S. that we take a look now and see what's working, what's not working, where are there redundancies, and where can we make sure that the financial system is doing what it's supposed to be doing, which is allocating capital and credit to fund capital formation, economic growth, and job creation.
Well, I can tell you right now, if you go on Main Street USA, they'll tell you it'll be a short survey. No, the answer is absolutely not. They can't get the money. People can't get it. You heard President Trump talking about people that he knows, but just regular folks. Household formation is at an all-time low, in part because people can't buy a house. You can't start a business. And the thing is, in Washington, D.C., we hear that term, unintended consequences, and yet when they're cobbling these things together, there are a lot of people who are out there saying it's not going to work, you're going too far. We know the pendulum swings both ways. In this case, it feels like it swung so far over to the point where it wasn't about helping, but it was punitive. It was about punishing an industry, and consequently, you punish everyone.
Well, again, I think it's appropriate to step back and take a look. I mean, the data, we're seeing more and more data, studies that our organization has commissioned, studies that the regulators have done themselves, most recently a Federal Reserve study looking at market liquidity and corporate bonds that affects the funding of business formation and business growth and investment in the U.S. All of these showing that we are seeing some negative consequences is because of some of these rules. And so it makes sense to go back and look and say, we want to make sure that we have, safe and sound banks. We want to make sure that we have good rules that apply to market functions. But at the same time, we want to make sure we maintain strong financial institutions, deep and liquid capital markets that can fund the economy.